Hello traders, welcome back to the channel. This is Juno with Trading the Charts Pro. Guys, we're back. We have one more weekly video where we're breaking down the overall market to come up with an idea of where price action is going to go in this upcoming week. Based on the thumbnail, you guys can see the market is setting up in a form of bearish price structure. So we're going to break that down, and I'm going to show you what that bearish price structure actually looks like from my point of view, and you can analyze the chart to see if you have the same outlook on this price action going forward, at least into the short term, probably into the end of October. We are looking to see the market pull back down. All right, now what is critical is where is the market going to go as far as down. And this is where we use the levels to identify potential support in the short term, where we may be looking to get a bounce and a move back to the upside. All right, so we will start off with all the bad news first, which is the Dow Jones. Guys, the Dow Jones looks terrible. Nothing is looking very nice about this thing. The trend still in a somewhat nice uptrend, but guys, the market had literally topped out when it made a high right around August 9th to August 16th, right around here. That was the top for the Dow Jones. We can see after that, Dow Jones pulled back to its uptrending support level, which it usually bounces, and it actually did bounce. But what happened here is it made the first lower high. So this was the all-time high, and then right around here market made its first lower high, and from there we see the market break the 50 simple moving average, and right here right now this Dow Jones price action is setting up in what I call a bear flag. Typically when we get a bear flag, we're looking for price action to make another move down, and in this case the next move down would take us back to June support level. So right before the market break out of this horizontal channel right here, boom boom, break out, pull back, and then we break out, made a new high. Right before it did that, we had a short-term horizontal support level right inside this level right here. So when we get the breakdown of this bear flag, this is the level that I am looking to see the Dow Jones pull down to, and that's around 33,347, right inside that region. That's where I'm looking for the Dow Jones to pull back down to on the downside. All right, pull over, start looking at this thing on the weekly. We can see guys, the market literally is pulling back right in the short term, and we're seeing like on Friday, this entire week has been nothing but selling. On Friday, huge volume came in. So really and truly, I'm looking to see this market actually break down, coming back down closer to the 200 SMA. If we move over and start looking at that on the 1 hour time frame, we can see that in the short term it's holding the 34,558 or 34,558 level right here is holding. But the moment price action breaks this level, it's nothing but more blood to the downside. All right, so is it possible that the market can continue to hold this level and we get a bounce out of this level? Yeah, that is very possible. I don't want to discount that, but when we look at what we're seeing on the weekly chart, you know, this is literally the Dow Jones flattening out, which is just topping out, where it hasn't been able to break out, and we're seeing where we're rolling. If we zoom in on the weekly chart just a little bit, guys, this is not a bullish candlestick. All right, this is not a bullish candlestick, and what this is showing me is the moment this level gets taken out, we're looking for price to break down. Yes, it would be very nice if price can hold and we get somewhat of a round out here, but in the short term we'd have to ask ourselves, how much higher will the Dow Jones go without actually pulling back? So my basis for this week for the Dow Jones Industrial Average is we're looking to pull down closer to the 200 SMA, close into the region of the 33,165 level, roughly that level. And then I'm looking for the market to start moving back in a sideways motion before we get anything else. If the Dow Jones comes down and break below the 200 simple moving average, guys, this is just a sign that the overall trend for the market has changed, and we may be looking to start come back down to retracement levels of the entire trend move to the upside. All right, so don't be scared, just continue to watch these price actions and see what and when and if and what we should do in the event of price starting to break down below those significant levels. All right, so now we're moving over to the S&P 500 SPX. This is the most important one because most of the stocks will, follow the S&P 500, guys, and this is a beautiful trend. This has been wonderful, but again, we look at the S&P 500, nice pullback to the 50 simple moving average like it always did, and we normally get a bounce and a move higher every time we pull back to the 50. So the 50 a simple moving average typically hold as support, but right around here, what are we seeing? Price pull down and start to form a base. Typically this pattern is just, it's just setting up to look like a bearish pattern, guys. And for the first time since around June, the market or the S&P 500 closed a little bit below the S&P, below the simple moving average, which typically is a sign that the simple moving average has been broken. It doesn't mean it's all over, no, but as a pattern reader, this is telling me that come Monday when the market opens, we have to watch this level very closely. We have to watch to see, do we break down and close strongly below this level? And if that happens, then guys, that is a clear sign that in the short term the trend has been broken and the market is looking to come back down a little bit lower. Now it starts to get a little bit more complicated for the S&P 500 in terms of determining where exactly is this thing going to go to the downside. So, in the short term, I do have some levels that I'm watching. On the weekly side, I'm watching this weekly low right here, so closer to the 4,300 levels. That's where I'm watching to see what price does. Last time price came down into these levels, we had a lot of buyers around this level, but a break of the trend can means that the market will look to pull back down to its 200 SMA or simple moving average, and then from that point we will kind of know a little bit more in terms of the direction of where things is going to go. All right, so that's how I'm looking at it for the SPX. Nothing too crazy, but it's just major bearish patterns that are building in both the Dow Jones and the S&P 500 as we speak right now. So it's a time to be very cautious. All right, guys, moving on over to the NDX. And with the NDX, guys, NASDAQ, this is the only one that I'm not too concerned about as yet, because I feel like there's a lot of levels to potentially support the NASDAQ if the NASDAQ start to sell off, which when it comes to the S&P 500, I'm not seeing a whole lot. If we already start to break below the 50 simple moving average, the next nearest support is really the 200 simple moving average, which that is a huge drop of roughly about 100 points for the S&P 500. So that's a little bit critical. When we look at the NASDAQ, market is still trending, right? And last week we talked about the market falling into a tighter uptrend. So a channel within a channel, right? So we have a big channel and then we have a smaller channel within the big channel. This happens a lot of time when the market is moving up or the market is just channeling. So we have to just read and analyze this to see, okay, where are the levels? Market breakout and we have been pulling back. Yes, we are building a base right here in the short term on the NASDAQ, but if we start to break down, we got the 50 simple moving average right here, which is also the short term support of the second channel. All right, so there's two strong levels right here that I feel like will support the NASDAQ if we continue to pull down a little bit more. All right, if this level gets broken, then guys, we're in a world of trouble, because and it's not so much of a bad thing, but we would get an opportunity to buy the NASDAQ as it pulls back down to the longer term support level of its bigger trend. All right, and pulling all the way back down here is not so much of a bad thing, because we would be anticipating to get a bounce right around this level, just like we did here, 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 here. NASDAQ is in a trend, very bullish trend. Tech is not going anywhere, right? Look at this pattern. It's not going anywhere. So I'm not too worried about the NASDAQ so far. If we look at the NASDAQ on the weekly chart, guys, same thing. We are having just a little bit of pullback, but we can still pull back down to this level where there was a lot of buyers here, a lot of buyers here, and worst case we break down and pull back down to the weekly support level, where it is even a greater time to put capital to work. All right, so looking at the NASDAQ on a 1 hour time frame, we're seeing where, you know, this level is holding pretty nice. Nothing crazy. Pull down on Friday and we start to get a little bit of buying into the close. So it's going to be interesting to see what happens when the market opens. Do we completely break down, sell off, right, and get another leg down to this level? And then from that point, we will know more as to where this thing is heading into the short term. But short term, Dow Jones, S&P 500, I am bearish. NASDAQ, I'm a little bit more neutral, but I would still like to see the NASDAQ pull back down either to the support of the short term support, second channel, or to its long-term support level of the bigger channel, and that's even a greater time to put capital to work. All right, so let's move on over to the Russell 2000, right? Russell 2000, guys, last week we talked about the Russell 2000, and the main thing that I was looking at with the Russell 2000 is I wasn't expecting that this thing would sell off and come all the way back down to the bottom of the channel. Why? Because we've been getting a rising 200 simple moving average. Now this is very important, right? Because right here there is a probability that if the market continues to sell off, we may see the 50 moving average start breaking down below the 200 simple moving average, and at that point it would in some case kind of signify that there's a trend change setting up to happen. All right, So we would be switching from a bullish trend into a bearish trend. But while the market is moving on a horizontal basis, we have to discredit just a little bit the 50 moving average breaking below the 200 moving average, because we have a longer term support level down below where there's a high probability that price may just come back down to this level and bounce and continue doing what it was doing. All right, now looking at what the chart is doing right here right now with the Russell 2000, we're in a channel. Price run up to the resistance and started pull back to the 50 simple moving average, which is also a conjunction level, bouncing off the 200 simple moving average. So I'm looking for this thing to make a move back into the resistance level above the 2300 level, and then from there we will know more. So a short-term trade would be a stop right below the 200, and our target would be the resistance level right here. So you know, risking a couple points. If it breaks down below the 200, then we get a stopped out, and in that case we change our position or our direction of the trade to now a bearish trade down to the support level, right? So, or you can do nothing. You can do nothing and just wait for price to pull back down to the support, and then you get a better chance to buy. But in this case, we may not get a pullback to the support. So this may just be a bounce off the 50 simple moving average, and we're heading back to the resistance and potentially looking to break out as the other indexes start to pull back a little bit. All right, so one more thing that I want to cover in this video is I want to look at the VIX, because the VIX is critical, guys. The VIX is the one thing that is going to tell us or help us to see the storm or the tsunami before it actually happened. All right, so we can see as of last week or the week before, the VIX has been gradually rising, rised up, pulled back a little bit, and here we are Friday, big push. So if the VIX start to break out above this, you know, downtrending line, we got to watch out, guys, because this means that in the short term there is more selling in the market. All right, and if the VIX break out, these are the levels that we're starting to watch to see, hey, will the VIX slow down somewhere at these levels, or is this thing just gonna go haywire again? All right, so there's a lot of resistance level to the upside that should slow the VIX down. And also when we look at the inverse relationship to the markets, there is a lot of support level, at least for the NASDAQ and the Russell 2000, where if this thing start to sell off, we have a lot of levels where price can find some very nice support. So it may not be anything too crazy as yet. All right, so guys, this is my weekly outlook on the overall market. This is how I'm looking at the price action for this week. You know, I hope you find some value in this video, and if you did, hit that thumbs up button, like, comment on the video below, and I look forward to seeing you in the next one.